Good day, everyone. Welcome to today's webinar on this beautiful chilly day here in Sydney. My name is Tony. I'm the Sales and Partnerships Manager here at GovReports. I hope you're staying warm wherever you are. I want to thank everyone for taking the time out of their busy schedule to join today. We do appreciate it. I've also got Tiana with me today. I've got Sandeep, who's going to help out with some questions. And of course, Deb, who will be presenting the webinar, who I'll hand over to shortly. But first, if you haven't heard of GovReports, we've been around since 2010. We sought out to build the best lodgement software on the market. Today, we're still building and releasing new features and integrations on a monthly basis. We're approaching 5,000 customers in Australia with a mix of tax agents, BAS agents, and direct businesses. We have an hour scheduled together today, so we do encourage you to ask questions as we go along. We want this to be a two-way dialogue so you can learn as much as possible. So please go ahead and enter those questions into the questions panel, which is a little question mark on the top right of the screen. And we'll endeavour to get to those throughout the webinar. If we don't have time to answer all the questions during the webinar, we'll aim to leave some time at the end to try and cover those off. The focus of today's webinar is Payday Super and Single Touch Payroll for businesses. We've recently released our new Payday Super feature, which we'll be taking a look at tonight. And we'll also be hosting a similar webinar tomorrow, which is more targeted for tax and BAS agents. I'll shortly hand over to today's presenter, Deb. For those of you who don't know Deb, she's a facilitator at ICB. She's also MYOB, QuickBooks and Xero certified, and of course a long-time GovReports user. That's it from me. I'm going to hand over to Deb to begin the presentation.
Thank you, Tony. That's very kind of you. Welcome, everybody. So glad you're here. It's a very exciting time, what with it being the end of the financial year as well. So there's a picture of Deanna and I. That's very important. These are the things we're going to talk about. We're going to talk about Payday Super, qualifying earnings, which is a name you're going to have to get used to. Talking about the concessional caps and maximum contributions base, the small business superannuation clearinghouse, and then GovReports Super Choice Employer Portal. And we're going to have a look at how that affects IAM reporting and IAM business. So let us all begin. So very important, Payday Super. There is certainly lots of information around. You can go onto the ATO's website and get a lot of explanation, and definitely encourage you to do that because you have the next sort of 3-4 weeks to get yourself ready. So Payday Super is going to change how to calculate and when to pay the employer's superannuation guarantee. So I hope you are aware of it and have heard something about it because it is coming in on the 1st of July 2026. So it means that you must pay the employees their super guarantee or whatever superannuation is owed to them on payday, on the same day that you are paying the wages. So that's the most important thing to grasp in the first instance. So key dates. Up until the 30th of June, you can still pay your super weekly, monthly, quarterly, but the payment obviously has to be in by that quarterly date. From the 1st of July, you must pay the super when you are doing your payday. So it's just going to be another payment as you are making your your wages payment, then you're going to make your super payment. Now, again, you don't have to change when, if you do weekly, fortnightly, monthly, whatever it is you pay your staff, that is going to stay the same. But the most important thing is that the super fund receives the superannuation that you are paying for each employee within 7 business days. So you can't sort of think, oh, well, I've got 7 days and I'll pay it on the 7th day. It's not going to work like that. The ATO won't be happy with you. So the superannuation currently is staying at 12%, and what they're saying is it is now calculated on qualifying earnings, and we will go into what that means. It's a new term, and it basically is replacing the ordinary times earnings, but there's always little few tricks around how the ATO have defined it. The other thing that you may hear from the ATO is qualifying earnings day, or QE day. And that basically is the day the employer pays the employee their wages. So this triggers the obligation to the superannuation guarantee. Obviously, you are qualifying earnings and super liability, and that's another thing that you need to get rid of, that it's not just qualifying earnings, but you need to look at the super liability in single touch payroll. And of course, you need that enabled software, which of course GovReports and the IAM software absolutely does, which I'm assuming you know about that. That's why you're here today. So the qualify earnings, or the QE day, means the nominated day the wages are paid in the bank for the employees. So, you know, if you always pay on a Wednesday, then Wednesday is going to be that QE day. Again, you don't change whether you pay weekly, fortnightly, or monthly. And as I said, you have to have the super into the super fund of the employees within 7 days. Now that's within 7 business days. So what that means is, if we look at this screen, which might be very busy, but say we get our timesheets on Wednesday, our payday is Thursday, that's the day we pay the super. We've then got 7 business days. So Friday's our first day. Saturday and Sunday aren't counted because they're the weekend. If there's a public holiday happening, then again, that's not counted. So in this scenario, the actually takes right through to the next, not the first Tuesday that you hit, but the next Tuesday that you hit the 7 days, because of those weekends. But of course, if it's a public holiday, if it wasn't a public holiday, it'd be the Monday that super had to be in the fund. So it's 7 business days. You just need to keep that in mind. But of course, the other interesting thing or stressful thing that might happen is that you're going to have another payday on that next Thursday, that you then start that cycle again. So there's going to be overlapping time. Another reason why it's a really good idea to immediately pay the super. Do not let it slide. There are also some extensions with the superannuation getting it paid, and that's if you're a new employee or your employee gets a new super fund. They do give you 20 days for that extension. So there's also an out of cycle. Say you pay a bonus. So perhaps you pay fortnightly, and one day you decide to give them a bonus, and so the bonus gets paid in the middle of that fortnight. What the ATO is happy is that as long as you go with whatever the normal 7 days is from your next ordinary pay, then that out of cycle can go with that day as long as you get it in there. There will also be exceptional circumstances. Australia always has those floods and fires and things that we go through. So the ATO Commissioner, they have the choice of when to grant extended times. So natural disasters are going to be the obvious one, but also there is talk of widespread outages. So, you know, if there's technology problems that are happening, then again, they may give an extension to that time. But again, don't necessarily rely on it. Keep that 7 days right to the forefront of your mind. Who's included? Well, of course, all of your full-time, part-time, casual employees, directors, closely held. So again, if you pay the closely held, you know, once a quarter or what have you, they still need to go through STP. And of course, they still need to have their superannuation paid from that 7 days that they are paid. Again, under 18s, of course, are also going to be included. What is another one that their ATO are emphasising a lot is the contractors being paid. And they're saying don't forget things like sports people and performers. So again, you know, not for profit, maybe a cricket team that pays their umpires, or somebody that works around the team, then they need to also receive payment and superannuation. And if the contractors are primarily for labour, even if they are a company, then they need to be paid that superannuation. You don't have to do it through STP, but obviously you might just find it that it is simpler to actually put it through STP. But if you've got normal contractors and they're basically paid for labour, they're not really paid for bringing equipment or providing whatever it is they're working with, then they need superannuation. So definitely you need to have a look at, if you do have contractors in your business, whether they're going to qualify. Authorizations are obviously very important, especially if you have employees who will be doing the process. It's really important because it's about money coming out of your bank account. And in general business, it is the superannuation, of course, it's going to come out every week, every 7 days, and obviously any fees associated with it. So it's really important to have a process that your staff follow, that you need to make sure that it's clear and consistent so that everybody then knows what they're doing, particularly if you're going to be away and they're going to have to contact you for that authorization to make that payment. So again, having that process is going to just make it a bit easier. And perhaps you have one person who actually authorizes the payment when you're not there, but there's actually another person who is doing the all the information into the IM reporting or business, so that again you split that sort of, there's two people that can be called on. And always in the ATO is there are going to be penalties if you don't get that money into the super fund. This first year, they say that they're going to be reasonable about it, and if you are really making an effort and trying to get it in there, then they're going to be a bit gentle. But if people are just ignoring it and they're not paying their super, then they're not going to be very gentle with the whole. So there definitely are penalties, and they can certainly get quite high. So they're saying that penalties can be 60% of the unpaid superannuation guarantee. They will be doing the superannuation guarantee charge statement now. And I actually had somebody say to me, oh, well, the ATO take a long time to get round to me. I'm not going to worry. Fine, but remember the consequence is that the superannuation becomes non-tax deductible, and you also have that 60%. So it is, there are going to be penalties. Now, another one is if you have previously, again, you might have done this and you think, oh, well, the ATO never come back at me. Say, for example, your super is, currently is due every quarter, and you get to the 28th of July, say, and you go, oh, well, I haven't paid it, I'll pay it, 2 days late, and it's paid on the 30th of July. Previously, up till this June, there has been what they call a late payment offset. Now, that meant that if you paid it, again, sort of 2 days late, you could put this on the superannuation guarantee charge statement, and they would give you a bit of a discount with the fees because you have paid it. That is going away as of the 1st of July. So it is very important that if you do pay something, and this June quarter isn't actually due until the 28th of July. So you go, oh, well, I'll just pay it on the 30th of June. That doesn't work in this year. What they will do is they will start to apply that to the 7-day super fund. And so you will, as far as the ATO is considered, you won't have paid June's super. So again, your penalties will be growing and growing. So it's really important. In fact, I would encourage you, if you can start paying your super as you know, every week now, if you pay weekly or fortnightly, then you get a little bit of practice, you see how it's going to work, you look at your cash flow, those sorts of things, and you don't get caught up in this late payment offset. Tony, is there anything that you want to add at this stage?
No, you're doing great, Deb. No questions come through at this point.
All right, cool. All right, so the next big thing, I mean, that is a huge thing that I've thrown at you, but it really is that, you know, it is sort of the crux of what Payday Super is. So the next thing is qualifying earnings. And the ATO do, again, have a lot of resources that you can go and look at. And so, for example, this is one of their sheets that they've got, and they are mentioning, of course, that it's qualify earnings and super liability. You can't just assume that it's only qualify earnings that you're going to have to pay super on. Now, qualify earnings, again, or ordinary times earnings. So previously, up until now, what we have paid our superannuation guarantee on is what has been classed as ordinary times earnings. And again, that sometimes is exactly the same as salary and wages, but again, it has its own little idiosyncrasies. So what they have now turned into qualifying earnings, and they have basically taken that list of ordinary times earnings and perhaps just changed it a little bit. Won't say that it's a lot, but it's enough that you will have to take notice of it. So the qualify earnings, as I said, replaces ordinary times earnings as how you calculate your normal superannuation guarantee. But remember, it's really, really important that you have to look at the employee. What award are they working under? And are there any specialties in the award that say, well, you have to pay super if they're doing jury duty, or you have to pay super when they're on workers' comp? And that sort of thing, that can be actually state-based, because workers' compensation is state-based. So you have to be aware of, is there an industrial instrument, as they call it, basically an award or an agreement, and that's what's classed, or that's part of what's classed as super liabilities. So it is really important for you to take this opportunity in this next few weeks, is to look at the awards that your employees are working under. Look at any company policy or employment contract that you've made. Have you stipulated anything about superannuation guarantee in that time? So your super liability could be any of these, the awards, any other legislation. And the reason I've got that one in there is I'm sure it's Western Australia has some legislation, and I'm pretty sure it's workers' comp, that they mention it. If there's an enterprise bargaining agreement, again, that can be industry based. So are you aware of any differences that it adds superannuation onto? Company policy, again, that you're very generous as a business owner, and so instead of 12% superannuation guarantee, you've decided to give everybody 13%, so that 1% is extra. So obviously that's still going to be true. And then, is there an employment contract that one particular person has had this special part, the superannuation added in? And so again, make sure that you check all of these before the 1st of July, just to make it easier for you when you are doing these this new superannuation.
Hey,
So
Deb, I'll just jump in there.
Yeah,
Sorry
please.
to cut you off.
No, please.
Just got a couple of questions come in. So first one says, does payment mean payment to the clearinghouse?
Yes, it does mean payment to the clearinghouse.
Yep. And then around that, how long does the clearinghouse have to pay the actual super fund? So I'm assuming it's a question around, we've got that 7-day period. Does that 7 days have to include all the steps from us paying them and then them paying the super fund.
Yes,
Is that
it
kind of,
includes all the steps. So it has to be in the fund. So whatever clearinghouse, that they also are very aware that they've only got that 7 days to get that money in there. So they're obviously, again, everybody's been working on trying to get all of their systems up to date so that they can do it.
and that is, that's 7 business days, just to clarify?
Yes, 7 business days.
Yeah,
So
perfect. Excellent.
the weekend's not counted, and if there's public holidays that are, you know, main public holidays, then again, they're not counted.
Excellent. And then we've got another one here. Would the super calculation apply to long service leave?
Again, you have to look at your state, or I would suggest that you go and look at the ATOs, which I'm just about to come to, with the where you can go and have a look yourself for that. Yeah.
Thanks, Deb.
Cool. All right. So qualifying earnings include, obviously, you pay your ordinary hours, all of that sort of stuff. Pretty much most of it won't change with what you're doing. But I just want you to check those extra things like the awards and any contracts. So you pay is paid leave, allowances, bonuses, lump sums. Generally, there's not very many changes to ordinary times earnings that has become qualified earnings. But what is just a bit of the pain is there is a couple. Commissions, all commissions paid to an employee. And again, make sure, you know, is that in the contract, you know, what's happening. But generally, it is part of qualified earnings. Salary sacrifice. Now, it's very important that if your employees are doing some sort of salary sacrifice, that you also make sure that the superannuation guarantee is being calculated on what their normal pay is, as if they haven't sacrificed for super. So again, they get the benefit of the salary sacrificing, but they're not losing out on their superannuation guarantee just because they're doing salary sacrificing. There is an expanded employee definition, and again, this is generally around contractors that are paid mainly for their labour. So they're sort of important things to look at. The ATO publishes common employer payment amounts for STP guidelines, you know, to clarify what the amounts are, salary, wages, and OTE. So I definitely encourage you to have a look at these tables, and then of course you've got to go and check your industrial instrument, I'll try and say that, so award or agreement or EBA that you may be working around depending on what business you're in. So this is the address for the ATO website. What payments are qualifying earnings is basically the page, and they have it broken up into all these different categories. So again, you know, obviously make sure, have a look at these and make sure that, you know, anyone like termination payments, salary sacrifice, super for long distance drivers, you know, it's interesting that they're specified, directors' fees, your bonuses and commissions, your overtime. They are going to give you like these following screenshots that I've got of what sort of things are qualifying earnings, but be aware that it's not necessarily everything, because you might call an allowance something different than what you know, the ATO calls it, or what it is in whatever award you are using. So for example, here's a screenshot, and these are gross payments. So they are talking about it, you know, casual loadings, shift penalties, and you'll see these have gone from ordinary times earnings to qualifying earnings, but they're exactly the same. There's a yes on all of those. And it's very easy, I found, that you look through it and think, oh, they're all the same. But there's just a few that are different, which is slightly painful. But, you know, charge rates for work performed, outcomes achieved, or targets met by contractors. Daily rates, employees compensated under a flat daily rate. So all of those are going to be considered qualifying earnings, and you are going to be paying superannuation on them. So here's an
Deb,
example.
I'm just gonna
Yeah,
jump in
please,
again quickly.
please.
I've just got another question here, and this was a similar theme that came up in the webinar last night. So if an employee's super information was wrongly provided by the employee, what's the process there? Like, is there sort of an extra time window that the employer gets? Or how do they resolve it essentially?
They only have the 20 days if they're a new employee or they get a new super fund. So if they're still working for you, then obviously you need to get onto them. You know, it's not something that you can leave and wait for them to be very relaxed about it, which sometimes employees are. You should be able to go and get a stapled fund, or the other thing is if they've got a MyGov, they should be able to send you the MyGov with the actual details. And again, how the ATO are going to react to that, I don't know, but definitely be seen at least to be chasing it up. I don't know what else to say. What about you, Tony? Have
Yeah,
you
no,
got any advice?
that's great. No, so essentially you've got 20 days to basically clear it up. Obviously, it's probably if they're a new employee, perhaps, because you know you would have figured this out earlier if it was incorrect details, I guess.
Yeah, so the 20 days is the ATO has granted that because, you know, new people might take a long time. They might have to get a super fund that they don't have.
Yeah,
So
yeah,
all of those things. But
excellent.
yes, yeah. But if it
Thanks,
goes
Deb.
on, I don't know that they'll be quite as relaxed about it, the ATO.
Amazing, thanks.
Okay, so here's an example, ordinary hours of work not stated. Now, obviously, most of us have, you know, they work 38 hours a week or they work 30 hours a week, whatever is in the contract. But in this instance, Kim works in a call centre. She works a minimum number of hours per week, but she also gets extra shifts where needed. So there's no real, you know, sort of you only work 38 hours a week. So there's no award or agreement in her particular instance of what's classed as her ordinary hours, and she's not paid overtime rates for her extra shifts. So all of Kim's wages are considered ordinary times earnings. As there's no stipulated hours and no pattern, Kim's ordinary hours of work are all the hours she actually works. So if 1 week she works 2 days and say maybe that's her minimum, the next week she works 3 days, the week after she works 4 days, and then she goes back to 2 days. All of her wages are therefore qualifying earnings, and therefore she is being paid superannuation on every hour that she works. Now we have another one. This is Evan. He works and picks fruit. And of course, there's lots of people who do that, you know, over the year. So he picks, again, he has no ordinary hours and specified in any award or agreement. He picks 5,000 kilograms of apples in his 30 working hours and is paid $750 as a piece rate and it's higher than whatever is in the minimum in the award, in the horticultural award. So they've gone to the award, they've made sure they're paying him more than what he, you know, would get in the award. He's getting 15 cents for every kilogram. So he's paid $750. That again is considered ordinary times earnings. And in this specific time, because again, there's no specified hours of work that are ordinary hours in the award or agreement, then again, they have classed this as his qualifying earnings. So he's going to get superannuation on the whole $750. So this is the sort of thing, and these are the examples. Again, you may have very, you know, more straightforward ones. Here's a bonus, but this is in respect of overtime. So Jesse is in IT, works above award annual salary. His ordinary hours are Monday to Friday, so we know that his ordinary hours are Monday to Friday. There's a special project. He has to work on Sunday or she has to work, depends, I guess, whichever it is, Jessie, girl or boy. As a reward, the business says, well, we're going to give them, they've worked all Sunday and it's really, you know, that we really appreciate it. We're going to give them $1,000 bonus. The $1,000 bonus is for work done entirely outside of the ordinary hours, because it's not Monday to Friday. So the $1,000 is considered to be overtime, and in this instance, it is not ordinary times earnings. So the $1,000 will not be included in Jessie's qualifying earnings. So it's really important, you know, that difference. Now here we have one of the sheets from the ATO where they actually talk about bonuses, and you'll see, if I can move my mouse, you'll see here it says bonuses solely performed entirely outside of ordinary hours. It was not ordinary times earnings, and in this instance, it is not qualifying earnings. However, if we go up to the commission payments and have a look at those, we'll see there's one commission there that says commission solely performed entirely outside of ordinary hours, and it used to not be in the ordinary times earnings. However, now they have decided that yes, it is part of qualifying earnings. So it's very different, whereas previously they were both no's. You could easily say anything worked outside of ordinary times, you know, out of sort of their ordinary hours, whether it be commission or bonus, they're not going to get their super. But that's not the case in this one. And this is where, again, this is this sort of odd little one that has come out, and you need to look at these to make sure that you've covered all of the types of things that you pay superannuation on or don't pay superannuation on, so that you can, you know, check them. Here's another one with, again, other paid leave, and this is again from the ATO, they've decided. So have a look. So long service leave that is not paid under a portable long service leave scheme, yes, it's qualifying earnings, whereas the long service leave that is paid by portable long service scheme, they're not everybody. The building and construction industry has it, and the cleaners also have it, and there may be some other types of workers that have it, but you'll see the difference. So you really can't just say, oh, it's long service leave and I'm paying superannuation. It is that definition that in this case, if it's part of the portable long service leave, then no, it's not a qualifying earning, and so you're not, or the employee is not receiving superannuation guarantee on that. But again, please go through these and do have a look and, you know, check at your business. The other thing that I wanted to bring to everybody's attention, because again, you may have businesses, you know, may have employees like this, you may not, but it's worth certainly knowing. And that's the concessional cap and the maximum contribution base. They're two important things that affect us with our superannuation. So the concessional cap, it looks at all of the super that the employee has paid. Now, it's not necessarily up to the business's responsibility to be checking this. It is up to the employees, but it's worth at least you knowing about it. So the employer's concessional contribution this year is $32,500. Or I should say up to, from the 1st of July, it's $32,500. Up to the 30th of June, it is $30,000. So what it is whatever is paid into the superannuation account for the employee, is it in total $30,000? Now that includes any salary sacrifice they may do, any personal contribution that may be put in, and of course their superannuation guarantee that you would be paying. And again, you're just going to pay them, but it's up to them to have a look and see, well, you know, if they're doing, you know, $5,000 worth of super a fortnight or a month, then, you know, then they need to look at that sort of thing. But
got another question coming,
yeah,
Deb.
Yeah.
I'm not sure if this is related to this slide or the previous one, but it says, what about paid out annual leave and long service leave during employment, i.e. not termination payout?
Well, annual leave is part of your ordinary times earnings. If you're just going on holiday and then you're coming back to work, then it is part of ordinary times earnings. But do go and have a look. There's more, as you saw, there was a whole long list of charts that they have. So do, and I think, is it this one? That's commission. Or is it this one? No, it doesn't say. But yes, you need to go and have a look at these from the ATO and see, because they do have different reasoning for termination things. Oh, here we see annual leave loading, yes, and annual leave that is clearly linked to a lost opportunity to work overtime, yes. So please, I can't give you all of them. We'd be here all night just going through them, but please go and have a look at the ATO website.
Thanks, Deb.
Okay, back to here. So yes, this contribution, and it what they usually do, or previously have done, was 25,000 for a long time. Then the last 2 years it's been 30,000, and I guess with everything that's happening, this next year, 26, 27, it's gone up to 32,500. And of course, I don't know if most of you have seen that there has been a wage increase that is starting on the 1st of July. So that $32,500, as I said, it's not your responsibility for the employee. You just need to pay whatever is the 12%. But if you have very high income employees, then there is a maximum contributions base. And basically that means is when you can stop paying superannuation within the year. Obviously, it's, every year comes the 1st of July, start again and you start paying it. With your qualifying earnings, you again have a look, but I'll come back to that. That's not what I wanted to say. The contributions base, the maximum contributions base, again changes how much it is. And now it used to be quarterly, so you could do your quarterly wages, and if they didn't, if they came up to the maximum, then you could not pay them that wage that quarter. Then you do the next quarter and the same thing. In this instance, they have now changed that to an annual cap. So what you can stop paying superannuation once you've got up to this maximum contribution, so the maximum wages of $270,830 per annum. When you get to that figure, then you can stop paying the 12% superannuation guarantee. And of course, $270,830 is superannuation works out to be that $32,500. So again, that's where they've got that match with that cap. But what is very important with this change about qualifying earnings and super liability is that you may have got through with the qualified earnings and don't have to pay any more on that. But if they've got something in their contract, something in the award, something else that, the company policy or their particular contract that they have with you, then you need to look at that. And if there's super that is defined in those, you may still have to pay it. Obviously, all of this, I am not a tax accountant, so I definitely tell you that you need to go and check this with your tax accountant, talk to them about it. But certainly there is a lot of research that you can do yourself on the ATO's website. I hope that made myself clear with that. Oh, we missed 2 slides there. Why don't you want to go to there? Okay. Thank you, there it is. Now, this is not really any of your business, but it's worth knowing that if you do have these employees that are high income, they can, if they're working So, for example, say they work 6 months for somebody and they actually get to that 270,000, or they're, you know, quite high up in it, then they get a new job and start working with you. They can go to the ATO and ask for this exemption certificate. Now, it has to be them. It can't be you. It has to be them to go and get it. And then the ATO will advise you that you don't have to pay super for them anymore, you know, once they reach that 270. So it is really important for the employees. It's not your responsibility to do it, but it may, if you have high income earners like that, you may have that sort of thing. And if it appears, you know, it comes from the ATO, then it is absolutely truthful. So the ATO has to receive the application at least 30 days before it starts. So they're not going to say, oh, like next Monday, please don't pay super for this person. It's going to have to, obviously it's the ATO, it's going to take time and comes back to you. But again, if they're not reached that 270,000, then you still have to pay the superannuation for them. But normally, again, if it was a new employee and they get high wages, again, they might have come up with it, but they're the ones that need to do it. Is there anything else, Tony, that we want to talk about? I lost everybody.
I'm sure if Tony's there, but there was a comment from Chris.
Yep.
He mentioned table 7, unused leave on termination. Long service leave is not a qualifying earning, just so to clarify it.
Well, look, please go to the ATO. I mean, that is where I got my information from. So you definitely need to go to the ATO. I won't say he's wrong. I will just tell you this is the information that I had, but please investigate yourself, talk to your accountant, and look at the ATO's website. Anything else, Tiana?
Just a questions from myself, right?
Yep.
We're talking about high income earner. So if I get paid out, you know, maybe it's a long service leave, ETP, whatever, for that year, and you know, of course, obviously, I might get more than the $270,000 something. Would that be, you know, would I have reached my maximum?
It's 270,000 of qualified earnings. So if they decide, you know, they say, yes, this is something that is part of your qualified earnings, then yes, you would be. But if it's not qualified earnings, then no, you wouldn't be. It's, again, not something I can definitely, you know, give you an absolute yes or no on a lot of these things, because it is the ATO and we're all still learning, including the ATO, about how it's really going to work. Does that help?
Thank you. Yes. Thank you.
Okay. So, small business superannuation clearinghouse. I don't know if any of you are currently using that, but one would hope that if you are aware that it is closing. So it's closing permanently on the 1st of July 2026. So you will only be able to log into it up to 11:59 p.m. Eastern Standard Time to the 30th of June. You can't get any reports. You can't download. There's no submitting instructions or making payments. Your login will be disabled. So it's really important that if you currently use the Small Business Superannuation Clearinghouse, that you go and download the reports already. Again, you've got this June quarter to pay. Now, it's still due by the 28th of July, and I actually believe there was going to be a bit of confusion for a lot of businesses in this first month of July. Because that June quarter needs to be paid, I would definitely recommend to you that you look at starting your, paying it more regularly in this month while you've got a bit of time to get used to it, and that you set up a clearinghouse or however you're going to pay it before the 1st of July. So it's really important, as I said, to download all the employees' past information if you haven't been downloading the reports, because you won't be able to get them, and to download the employee payment transaction history. So again, in case, because remember, we need to keep records for at least 5 years. So if the ATO come back to you, you've got paperwork that goes with it. So think about that now. Don't wait until 11:59 on the 30th of June, because you won't be able to get into it. So with the Small Business Superannuation Clearinghouse, again, would encourage you to switch to an alternative now as soon as you can, and establish that new process for whatever you're doing for the next couple of weeks. Again, reduces that risks of late payment. So it also will probably, be a bit better for your cash flow to spread it out, because remember, you are going to have those payments every 7 days in July, as well as if your quarter, if you haven't paid the June quarter, you're going to have all of that to pay in July as well. So do make sure, do start to think of it, because you only have a few weeks. And of course, the wonderful GovReports is providing you a new solution. So that's what we're here for, of course, to know about this. But yes, they are providing a new solution. So introducing the GovReports or Super Choice Employer Portal that is going to be available. So ignoring GovReports, but if you just see the I am, the portal is, you're going to do a payslip like you're already doing. If I'm assuming that you are using the I am business or I am reporting, the single touch payroll, you enter a payslip, you prepare a super payment, and you submit it to the Super Choice, which is the clearinghouse as such, or employer portal, whichever you like to call it. And then the employer portal receives the money and distribute it to the super funds. So it's going to be very simple. It's going to be very straightforward. It's just a matter of remembering to do it as you pay the wages. So we have the Super Choice set up. So you've got to sign up for it. And there is that registering of the employerpay.com.au/GovReports, obviously with all your information. You've then got to decide what sort of payment type you're going to do. Are you going to do direct debit or direct credit? Now, direct debit is where the Super Choice portal has your bank details, and once you have given it permission, once you have authorized each pay, and it's not just one, authorization for the whole year, you authorize it each pay, then that's the way it gets paid. That's direct debit. However, direct credit is where they will give you a reference number, and you have the choice to go and pay it yourself. Obviously, the advantage of the direct debit is that you aren't going to forget it, because once you authorize it, it's going to have that money taken out of your bank account. But again, there is that choice of direct credit. There's a form, obviously, that you need to fill out and authorize. And you also need, even if you're doing the direct credit, you need to give them a refund bank details in case there is anything that, like somebody's given you the wrong number, it's gone through, it's found out, it's been kicked back, and so they have to obviously give you back the money. So you need that refund for that direct credit anyway, just so that you're aware that that's what it's there for. Then obviously it's available for I am business and I am reporting. it has additional features to the single touch payroll, which I'm assuming if you're already using IM Business, then you already have, you're already aware of what the STP looks like. There are going to be additional features. As I said, the direct debit or the direct credit, and you need the bank details. You are charged pay as you go, charged per employee. And once set up, everything is done via your IM reporting or your IM Business, which means you don't have to be going in and out of different programs. You're going to get all of your information through GovReports or IM Business. So it's very easy to go in and get all of the information in one place. So it's $1 including GST per transaction. So that's equivalent to one employee, that's one transaction. So if you have 2 employees that you pay fortnightly, then that's going to be $4 a month. But if you have, say, you do closely held, and so every now and then you throw in this extra pay, then it's only going to be that $1 for when you use it. So that's really great, I think. Tiana, is there anything that you want to add that I didn't cover about the charges?
We just got a question about can we use credit card for super payments? So I was hoping Sandeep might jump in on this one if he's on the call.
I don't mind. Whoever knows the information I'm happy to have.
If we can't get the answer now, we'll come back to you on that, Emma.
I believe we can, just not Sandeep is not there. He's our technical person. What happens to him? Yeah, I believe we can. We'll come back to that shortly, Emma. Was it Emma that asked that questions? Yes, I'll just reconfirm, but I believe yes.
Okay.
The question that I have, Deborah, is that at the moment, a lot of closely held directors, they pay themselves as a loan. That's not recorded until the accountants finalize their books at the end of financial year. So, if that's the case, then we just report our SDP or the superannuation payment at the end of financial year. Is that
no, the ATO have not been doing that for a while now, and they absolutely want people to be doing at least quarterly, if not when the closely held people take their money. So I would suggest that they need to be having a direct conversation with their accountant about that situation.
Okay. The second questions that I have is that at the moment, for example, my accountants or my BAS agents have been reporting SDP for me to date. They look through my books and they report it directly without my engagement in the process. So what's changed from here onward now with the superannuation's Payday Super?
So with the single touch payroll, if you've got somebody else who's doing it, who's an agent and not an employee, then the single touch payroll can absolutely have a 12-month authority like they previously would have asked you for. That's fine. But as soon as there is money involved and money coming out of your bank account, it cannot be done with an annual authority. It has to be done each time that money is about to be taken out, and it has to be from you. You have to give the authority. It can't just be the agent going, oh, well, I'm going to pay this straight away. And again, if any agents are on, if they come tomorrow night, they're going to see us talk about that as well. So again, if any of you are using agents, obviously talk to them about what their plan is for getting your authorization. Does that help, Tiana?
Yes, thank you.
We've got quite a few questions coming in now. I might start down with Sally here, who's so she called in a little while ago and told we wouldn't be doing this. So I do apologise, Sally. It has been on the radar for a long time, so I'm not sure we told you we wouldn't, but she just wants to clarify that she can do all her super fund payments through GovReports.
Yes, that's my understanding, and that's how I'll be using it for some of my clients.
Perfect. Now we've got Julie. If we use a contractor to do work and they have to pay their employees super, not us. So nothing changes for us. We just pay their invoice for work completed as we always have.
I guess my question again, I'm going to, have this cop out all the time that you have to be talking to your accountant about it, because even though they're a company, is it are they paying just the one person that keeps coming? So somebody's got to be paying their super, and obviously you and the accountant have to decide what's appropriate. Not for me to tell you what's appropriate.
Yep. All right. So we've got Sandeep on the call. Who's our technical
I'm sorry, guys.
expert.
My laptop got some trouble. I can't get into that. So now I'm in now.
I actually have to jump in another meeting, so I'm going to hand over to Sandeep and Tiana and Deb to finish off. So Sandeep, if you go through the questions, sort of by oldest to newest, we're up to Nicole.
That's okay. Yep. There was a questions regarding credit card, using credit card to pay for the super. Is that possible through GovReports, Sandeep?
Not at the moment. So we are partnering with the Super Choice, and then it requires the bank details. It's only through the bank.
For direct debit. For direct debit, what about direct credit?
Direct credit would be you're going to pay from your bank account directly to the nominated bank, Super Choice Bank, with the payment reference number.
Okay. So I've been told credit card. So credit card at the moment is a definite no?
Yeah. At the moment, no.
Okay.
Can we sort of save some of the questions, because I want to get through this and I don't want to hold everybody up. It's already 2 minutes to 5 by me.
Yep.
Tiana, is that okay?
Yep. Go ahead, Deborah.
Okay. So when you get the Super Choice portal, the only time you really have to interact with it, as I said, because all of the information is coming back to GovReports, is when you have to set up a self-registration. So as Sandy said, you obviously need the bank details. But the first thing we do, obviously, is the ABN, the email address that is going to be used for all the communication. The next screen is for the employer information. Have you been authorised? And again, if this is an agent that is doing it, they're going to need to give you an engagement letter, or have it in their engagement letter, so that you can say that yes, they're going to be authorised to do this. And I hereby declare on behalf of the registering organisation that the details provided are true and correct. So obviously that's something that agents as well as the business need to make sure, or confident that that is true and correct. Then you put in all the business details for the company that is going to be, for their employees, they're going to be paying the super. And then we come with the bank details. And you'll see there it says direct debit. There is also the selection for the direct credit. And remember, the reason that you're putting the bank details in for the direct credit is if there is ever a refund that has to come back from the super funds, that the portal, the employer portal, has a place to give you back the money, because obviously you want back the money if it hasn't gone into their super funds. And then this last page is where you are signing it off. It's giving you the details that you've filled out, and you've ticked that you've seen all the legal documents. So that's generally the only sort of direct time that you'll be in the super clearinghouse or the employer portal, because as I said, the rest of it will be with the I am reporting or the I am business. So then if we have a look at the I am business, again, what you will be doing is you prepare the pay run. And again, if you're currently using it, you know how to do that. That isn't going to change. Then you prepare the super fund, the super payment. Then you review it and authorize it. And again, I would encourage always to have, say, you know, if an employee does put the information in, that then you as the boss review it and authorize it, and then it is submitted. So this screen, I'm sure you're used to seeing, where there is a pay run. You obviously go to the payroll events, pay run, and then you tick whoever it is you want to pay their super from and hit that green button that it says super fund. If you come into it, and for example, when I was doing this, I went out, came back in, and you get this draft. What you'll also see there, and you may just see the number, it has that SP number. So what that is, if you are doing a direct credit, that is likely to be the number, one of the part of the reference that you're going to be using to pay it when you pay it. And you'll also see there it confirms, you know, the bank details and the employer details and the employee, and tells you you're just, in this case, we're only paying one employee. When I hit the edit button on this, then it comes up with the information, how much I'm going to pay for this, and this is where I'm going to send. So these buttons are here, the validate, the submit to super choice, send for authorization, save as a draft. So obviously after I've got it as a draft, then I want to send it for authorization. The other buttons I'm not going to use yet, because I want, of course, the business owner to see it and make sure that it is the correct information. Then there can be an email to the client, or, you know, to the business owner, and again it gives you this action and it tells you how to authorize the payment. Click the button, it'll redirect you to GovReports. Log into your GovReports account, go to the I am application, go to payroll, super payments, review all the details carefully and confirm and authorize the payment. So you'll see as you go along, all of the screens are telling you what's happening. So you'll see this, the orange or yellow box says pending for authorization. It's waiting for that authorization to come through. Then this is a typical of what you'll see when you can go and authorize it. So the business owner can go into this screen and look at the superannuation, check that everything's okay with them, and hit accept, and it will be accepted. Then we've got, again, there's reports, as I said, all the time that have lots of information that will be able to tell you where the process is. And in this case, you'll see the first one with the yellow is got, it has been authorized by the client. So we're ready to send it, submit it. Then this screen, again, super payment details. So there's multiple screens you can go into to keep that flow going. And this is telling you that it's already been authorized by the client and you can submit the report, which is all very nice. You know, it's great giving you all of that information. So the progress is that once it's been submitted and there's a reference number generated, it takes 0 to 3 days to make sure that it takes the money out of your account. It payment cleared by the employer's bank and received by the Super Choice Gateway, and then the Super Choice distributes the funds. And again, that is all going to happen within 7 days, as long as the business pays it on that first day. Definitely need to make sure of that. Obviously, you're going to be notified if it's a failure, but we're hoping all the time that it will just be success And again, you can be notified, or your employees can go in and look. Whoever's the one who does it can go in and look all the time and see whether the reports suit them. But failure, it's going to come back, tell you. And again, if you have an agent doing it, then the agent will, or your employee will be aware of those, and you obviously then need to investigate what's happened. Is it the super fund that's wrong? Is it the client number that they've given you that is incorrect? And obviously that will need to be fixed and then sent through again. Now, as far as I am aware, and again, Tiana or Sandeep can correct me, but if the as far as the charging, the dollar per transaction is going to be charged as an individual super transaction. Again, it depends whether the tax agent's doing it, the BAS agent is doing it, or you are doing it, about who actually pays. That obviously can be worked out once you are trying to set it up. And it is charged at the point of submission to the super choice. So again, if when you submit the report, then that is also when the dollar is required. And then it applies to both, whether you do it through GovReports, which you probably won't be, you'll be doing it through the IM business. And again, if you are doing that subscription model, and if you are the agent or the business, then again, you need to have that so that it's available so that they can take the money, and you can do it with, you know, having credits in the bank account. Make sure you have those details. Tiana, Sandeep, is there anything you want to add to that?
It's all good. We just probably go through some of the questions, Deborah, if that's all right with you.
Yep. Well, let me just get to there. And
Okay.
so coming mid-June, as far as I'm aware. So Tiana, you go ahead.
Okay, cool. There's a couple of questions and that we haven't covered from the last break.
Yep.
How many users can access the account for IM business or IM or the IM SDP? Nicole, currently with IM subscriptions, that's the business ledger and the SDP reporting. Unfortunately, there's only can be one user on the account. So if you are currently having an employee using the system to do the reporting, they can send it to you for approval for the payments. But you can, on this account, you can add your BAS agents or your tax agents into the account for free, and they will get access to your account and be able to process your reporting for free. So Kate has a question. So 5 employees pay weekly. Unfortunately, you know what that means. If it is going to be $1 per employee each week that you do, so that will mean $5 for each time that you lodge. You pay the super for these 5 employees. The questions from Lisa. So there is a section for us to set up the superannuation details. Correct. So I think the team will be officially releasing for beta for on the weekend. The reasons that we don't want to release it today is simply because we want you to sort of like take your time and not and not calling us immediately right after the webinar, simply because we still have to cover for the tax and BAS agents from tomorrow as well. So if you can wait until the weekend, have a look through it, and possibly start calling us. Now, the beta versions means that, like during this time, we get feedback. If you give us feedback, we will analyze that and assist, and perhaps also make further changes along the way. The 15th of June will be the official date that we are releasing, like the production releasing. Of course, if you are using the system from the weekend or from next week to do the payment for superannuations, you can do so. There is no issues. It's just that, like we might not have all the help guide, all the videos that you might need. So in the meantime, if you after today, this webinar is recorded, you can revisit and we will post it on our website and also send it to you for those that are attending or those that missed the webinar, register but missed the webinar. We'll send it to you. You can revisit the webinar and the recording and ask us any questions. And like I said, if you want to register to make, to test it out, give it a, give it a try, you can do so from the weekend. Further questions, just hold on. Yes, you can, the video will be available. Are you going to show us how to use MyGov to launch superannuations? Oh, yep, that's already covered. The final product, as I mentioned, it will be from the 15th of June. It's a shame you didn't cover teaching us how to use the program. We did, Lisa. It was a step-by-step slides. So perhaps you can revisit the slides afterward. We will send it out tomorrow. Hopefully we can attach it to the video and you can see that. We pay our employee who is family member into SMSF, of whom, sorry, the question is, I'm reading to myself. We pay our employee who is a family member into our SMSF, of whom is a member. Can we still pay? Yes, you can. SMSF is covered in there. That's the APRA and or SMSF. I think that's all the questions. Deb, anything else that I've missed?
I don't know, but obviously we will be creating also some more information for you to have as a backup for learning. But this, we just wanted to give you an overview, and it was more about making sure that you understood what you've got to do for Payday Super as well. So other than that, I'm going to thank everybody. Thank you for attending, and thank Tiana and Sandip for giving me all the information. And yes, and being here. So over to you, Tiana. Is there anything else you want to say to anybody?
Yeah. Thanks, everyone. Like I said, with this, the webinar today is recorded. We will be sending out the copy of the recording to everyone that attend, and those who missed the webinar today, that register but missed the webinar. For all other people, if you know, you can view the recording directly from the website. If you've got further questions, you can ask us. And for those that will be signing up, register their business for the superannuation payment through GovReports. You can start using the system, the beta versions hopefully from the weekend or early next week. And if any questions, you can give us the feedback or just give us a call. Thanks again to everyone.
Thank you, Tiana. See ya.
Bye.